Hello and welcome. I'm Matt Hammond, and I'm talking about the impact of new sales tax laws. So, our agenda for today, we're going to do a deep dive, high level sales tax overview to make sure we cover kind of sales tax 101, 201. We will discuss the South Dakota Wayfair ruling and how that impacts your business. We are also going to do a deep dive into economic nexus, one of the new things that has changed drastically over the last couple years. We'll spend a few minutes talking about how you can automate sales tax compliance. We're going to dive into exemption certificates if you are not collecting tax or you have exempt customers, how to best to handle that. We'll then also dive into streamlined sales tax, consumer use tax, and then also cross-border solutions for any of those companies out there that are expanding and working to sell to international customers. So this is going to be our agenda for the day today. And a little bit of background about Avalara. We've been in business over 15 years. A couple cool stats here. We have over 30,000 customers worldwide. One of the things I really like to point out is we processed over 2 million sales tax returns last year. We have over 700 different technology integrations, direct connections where we can calculate sales tax in given platforms, and then almost 18 billion transactions processed through our tax calculation service annually. Now, sales tax is very complicated, and we're going to get into the nitty gritty here shortly, but some of the things that are really important, there are 152 million mailing addresses across the US, over 12,000 taxing jurisdictions, millions of product and service exemptions, and then hundreds and thousands of buyer and seller exemptions. And this is really why sales tax is very complicated, and we're going to dive into that throughout the webinar today. So the first thing we're going to do is we're going to talk about sales tax. We'll get into the sales tax 101 and 201 and really just make sure you have a firm understanding of what you need to know, the basics, so you can be versed as you head into 2021. Now, everything starts with nexus. Nexus is an industry term that means you've established some sort of physical presence or a tie to a taxing authority. Now, we're going to talk about a couple different ways that you can create Nexus, but Sales Tax Nexus gives you an obligation to have to collect, file, and remit sales taxes in a given state. And what I like to say is, think about all of the things you see on the right side of the screen here on the map, and ask yourself if you have any of those outside of the state you're located in. So if I'm located in North Carolina and I go to trade shows in Texas, if I have multiple locations across the US in Washington, Arizona, and California, if I have inventory or board members or employees outside of my home state, those are states you should be collecting and remitting sales tax in. So lease or real property, affiliates, and again, number 5, we'll dive into economic nexus. But the big thing is, look at the state you're located where you have your home office, and then ask yourself if you have any of these things outside of that state. And if you do, then you potentially need to be getting registered for sales tax purposes in those particular states. Now, the South Dakota Wayfair ruling is one of the things that came up just recently. And what I like to say is the entire sales tax world got flipped on its head a little over 2 years ago. And really what happened was South Dakota went to the Supreme Court and they wanted them to change a rule that's been in place for a long time. And their argument was that the way people buy and sell products has drastically changed. And they wanted the Supreme Court to change the rule. And on June 21st of 2018, the Supreme Court actually ruled in favor of South Dakota and allowed them to impose sales tax collections for remote sellers, as we like to call them, or out-of-state sellers. So the biggest thing that really it needs to resonate today is that as a seller, you no longer control what state you collect or remit sales tax in. And what I mean by that is now, if you sell enough of your products to a given state, you're going to have to get registered in there for sales tax purposes. And South Dakota was just the beginning, and their thresholds were if you do an annual sales over $100,000 or being the key word for South Dakota, you do 200 individual transactions, you're now going to have to get registered to collect or remit sales tax. And it doesn't take anything away of traditional nexus, traditional physical presence nexus, as we'll call it, but economic nexus is kind of the new lay of the land, if you will, in the sales tax space, and it's made it very difficult for companies to scale and also have to get registered in new states. Um, and sales tax compliance is very challenging. It's typically been done manually, and what we're seeing now is the tides are really turning, and companies are looking to automate this because now they're having to get registered in a lot more states. So this happened over the past 2 years, and again, a lot has changed, but it's really coming to fruition now. And what we do is we look back at the past couple years. So prior to the Wayfair South Dakota ruling, there were about 6 to 7 states that already had economic nexus laws in place at the local level. Now, when you fast forward to June 21st, 44 of the 46 tax collecting states have adopted economic nexus. They put their own individual thresholds in place. And there's a handful of states on here that are worth pointing out. So there's 5 states that do not impose sales tax collections, and those are the nomad states, which are New Hampshire, Oregon, Montana, Alaska, and Delaware. So those states don't do sales tax, and we're just waiting on Missouri and Florida to put their thresholds in place. And at that point in time, all 45 states plus Washington, D.C. will have adopted economic nexus. And what's really going to be important for you, your business and or your clients, if you're a QuickBooks Pro advisor or a bookkeeper, is the days of collecting and remitting sales tax in 1 or 2 states are long gone. They're a thing of the past. We're now seeing companies have to get registered in 3, 4, 5, 20, 30, heck, even 45 states for sales tax purposes. And for the longest time, you rely on your bookkeeper or your accountant, and they would do sales tax, but it's not their bread and butter. Right? You got to think about it like this. If they were a CPA or a bookkeeper in Florida, they probably have a handle on Florida sales tax decently well. But now when you add 20 other states into the mix, and I live in North Carolina, I don't have the foggiest idea about the sales tax in California. As a business owner, I wouldn't want to learn it, right? I would probably leverage a partner or leverage someone like Avalara where we can help automate that for you. So again, a lot has changed over the past 2 years, and we'll dive into why that's really important. And this is some really cool stats here. So how many states has your business triggered Nexus in? Historically, we had a lot of folks that were only in one, but again, you can see here a high percentage are now having to get registered in 21 plus states. And if we do simple math, I usually ask most of the companies we talk to, what's your annual revenue? Now, if most states have a threshold of $100,000 or 200 individual transactions, if you're a $3 to $5 million company, odds are you're going to have to get registered in some additional states. And in totality, it's going to be based on, you need to be thinking the states that you have the highest amount of sales in. So if you sell a product that's very geographically based, like say big furry winter parka coats, and you sell them to the Northeast, you'd want to primarily look at those states and see if you've hit a threshold in those particular states. But now it's going to require businesses of all sizes to have to monitor their economic nexus thresholds and see if they've hit any thresholds and or if they need to get registered. And again, each state has its own tax rules. Product and service taxability can vary from state to state. Filing requirements are different. And again, managing it gets very cumbersome and it takes up a lot of time. And I'm a firm believer in do what you do best and outsource all the rest. And sales tax is no different, right? So we'll walk through this today on the while you're with us on how we can help you and really what you need to be thinking about. Now, we touched on economic nexus, and I don't like often to read the slides, but this is a good one. So economic nexus is a tax collection obligation imposed on sellers based on their level of economic activity within a state. And unlike traditional physical presence nexus, it's based entirely on sales revenue, transaction volume, and again, some states it's and some states it's or. Every state is different, but the goal was to effectively level the playing field between non-collecting out-of-state sellers and those folks that had just a brick and mortar business. And I'll give you a bunch of examples here shortly of specific companies or business models that are out there that are going to be impacted by this. So what does it mean for me? That's what I get all the time. Matt, well, what does this mean for my business? Well, number one, you're going to have to get registered in some additional states. Now, getting a tax ID so you can legally collect or remit sales tax in those particular states, that's something you can do on your own. You simply go to the Department of Revenue website, or you can leverage a company like Avalara, where we can do the registrations and get those tax IDs for you. Number two, you're going to have to file additional sales tax returns. And that's one of the number one things I can't stress enough that people want to automate. They don't want to file sales tax returns. It takes humans, it takes hours at the end of every month or every quarter. It's one of the number one things people mess up. And compliance is now more than ever, states are really trying to make sure they get their money as in lieu of what's happened in the last 10 months. And then again, all sorts of business activities and industries are going to be impacted. So drop shipping, exempt customers, exempt sellers, marketplace facilitators, every type of business is now facing a new challenge as it relates to sales tax, use tax, compliance as a whole. And we're definitely here to help. So we'll walk through this. These are what we consider the 5 steps to managing sales tax. And I'm just going to go ahead and put these 4 up here real quick. So number one, understand where your business must be collecting or remitting sales tax. We have a free Nexus assessment on our website at avalara.com where it will just ask you a bunch of kind of general questions about your business and then tell you which states you should collect tax in. Or we have a paid service, which is a Nexus study that covers the whole country, and it's a lot more granular, a lot more detailed, and we will ask you a bunch of specific questions, state by state, about your prior 12 months of business activities, and then we'll give you a very definitive, finite report that walks through which states you should be collecting or remitting tax in. Number two, get registered to collect and remit sales tax. Avalara works with a partner, businesslicenses.com. We typically get the registrations, they come through on our side, and then within 2 to 3 business days, we actually get those tax IDs back. So it happens very quick, and it's one of those things where you could do it on the department website, DOR website yourself, or you could leverage Avalara and our partner to get those done very quickly. Number three, Avalara Avatax. So make sure you're calculating the proper amount of sales tax. I'll dive pretty deep into Avatax here in a couple moments. And then number 4, track and manage exempt sales. Now, a lot of companies we talk to, they're like, hey guys, I don't have a sales tax problem. I have 5,000 customers. I have 4,000 certificates. That's a huge piece to the compliance puzzle. And it's one of the number one reasons people fail a sales tax audit. Number one, their use tax was out of whack. They weren't even charging use tax for things that they were purchasing for their business, or they have orders, transactions, or sales in a state they're registered in with 0 sales tax, and they can't provide proper documentation for why they didn't charge a customer sales tax. And as the seller, it is your responsibility to be able to provide documentation for why you didn't charge sales tax, so exempt customers. And I'll talk to the certificate piece here in a few minutes. And then number 5, file and remit the sales tax returns. Again, that's the number one thing that takes a lot of time. And again, it's really what our automation is meant to do. And as you're having to get registered in additional states, you're going to be filing more and more sales tax returns. So now's the time to put some automation in place as you're going to have to get registered in additional states. So let's walk through how you can automate sales tax compliance. It's one of the big things is what does it mean and how does it work? So Avatax is our core product, and we have over 750 direct integrations, and we have what we call these connectors. Now, our connector is a piece of software that will allow your QuickBooks Online, your QuickBooks Desktop, your NetSuite, your Oracle to talk to our tax engine. And so how that works is you would download our connector. Once you go put in an invoice and it's in a state, you're shipping a product to a state that you are registered in. When you go to save that invoice, and it can be done on an estimate, sales order, quote, or an invoice, when you go save it and it's in a state you told us to collect or remit sales tax in, it will reach out to our tax engine, represented by that A in the cloud. And then in real time, we will properly assign the rates, properly assign the rules, and put a tax determination back onto the invoice in under 0.2 of a second. Now, there's a lot of things that happen in real time, and I'll show those on the next slide. But you need to be thinking about what does Avalara and what does Avatax do? So we are going to determine the proper amount of sales tax, so city, state, county, any special taxes that are applicable. We do rooftop level calculations, which is very important. And then we can also file the sales tax returns and remit the payments on your behalf. You'll see on the very bottom of the screen here, Avatax doesn't support cash-based accounting. We do require companies to be on an accrual basis for sales tax purposes in order to leverage our end-to-end automated solution. And in that real-time calculation, we're going to validate the address. We're actually going to look at any sourcing rules. We'll take into account whether or not the customer or product is exempt. We'll take into account if it's taxable or not. And then we look at any back to school holidays. Ironically, kids are going back to school here shortly. For if you're selling things that have exempt or partially taxable goods. So you need to be thinking about, clothing and apparel, software as a service, maintenance, contracts, installation, labor, freight. All of those things are going to have varying taxability, and we will take into account each individual line item on the invoice and determine if it's taxable or not across all 45 states plus DC that do charge sales tax. Now, this happens in real time inside of QBO and QBD. And then also if you had a web store and you were using WooCommerce or 3D Cart or BigCommerce or Shopify, we have direct integrations there to calculate tax when somebody is checking out on the web store as well. Now, one of the questions we get a lot is, well, how am I going to know when I need to get registered in additional states? And it's a great question. If you're not using Avalara or using a third party to handle sales tax compliance for your business, this is where we are going to be a huge value add. So when you're using Avatax, our calculation engine, we will actually be monitoring and alerting you if you've hit a threshold. So for example, Georgia, you can see here, it has gone over 354% of the sales, so in the threshold, so that state would be highlighted in a darker orange. If you hit 80% of a threshold, it will be highlighted in yellow, and when you log into your Avatax account, it will notate that you do need to get registered in that additional state. So keeping track of sales tax rates, rules, boundaries, if you've hit a threshold in a given state, it's just not something that can be done manually. It's going to take too much time, and if I'm a business owner or a controller or a CFO, I'm looking for things that I can automate now, right? After having to lay off workforce, having everybody work from home, now's the time to look and find things that you can automate as you go to scale and get through the pandemic. So let's talk for a couple minutes about taxability. This is, again, one of the number one things people have a very difficult time with. And there's some really cool examples. I'm not going to read all of them, but on the map over here that just give you an example of whether something's taxable in one state or exempt. The bagels in New York is quite ironic, because a taxable bagel, if you slice a bagel in New York, there's a service involved, so it becomes taxable. If you order it whole, it's actually exempt from sales tax. So just some funky little sales tax taxability definitions right here in front of you. And then, you got to think every state's different. You have states like Colorado, Louisiana, Alabama. They actually have local jurisdictions and potentially local varying taxability. So that's one of the things you're going to have to keep in mind as you're getting registered in additional states. And if you're selling candy or food items like a Snickers or a Kit Kat, the reason the varying taxability is there depends on the flour content, whether it's considered a candy or a snack or a food or a grocery item. So very, very difficult. And states are looking for ways to get additional revenues. And sales tax is definitely one of them. We have a really cool chart that we can send everybody after the thing today if you want to take a look at it. But it's really cool. It goes state by state. Now, I mentioned earlier, Avalara is going to do rooftop level calculations. The majority of the folks out there leveraging QBO, QBD, they're just updating rates and putting a file in for the tax rates and tax every month. Now, Avatax, our tax engine, is actually going to do rooftop level calculations. And this is a great example. And I think I mentioned a few minutes ago, Colorado is one of the most challenging states out there. However, Avatax is going to do a rooftop level calculation. So this is the same zip code in the same neighborhood in Commerce City, Colorado. And all the houses in purple have a combined or a composite tax rate, if you will, of 4.75%. All the houses in green have a combined tax rate of 9.25%. That's almost a 5% delta from one side of the street to the next. This is why we say zip codes aren't the right tool for the job. they're not 100% accurate, and why we would stress rooftop level calculations. And again, not every state's different, that difficult, but Colorado, Louisiana, Alabama, Illinois, Texas, and California, those are some very, very difficult states for sales tax. And it's definitely would be a smart move to at least have a conversation and walk through how we can help to ensure accuracy. You have to start with calculating the proper amount of sales tax before you can even then go file and remit it after. So really, really key stats here for to stress rooftop level calculations as opposed to zip codes. And if you're just using zip codes, that's not going to determine any taxability as well. So we're kind of view Avalara as a one-stop shop, global solution for all business sizes of businesses across the U.S. as well as globally as well. Now we're going to talk about exemption certificates, and again, I talk to a handful of folks every week where, what they're dealing with is not necessarily sales tax. So you may be in manufacturing, distributing, or you may sell to a lot of folks that aren't end users. They're reselling your products. So what are solutions that are tax exempt, right? Reselling a product, universities, government entities. There's a lot of different reasons out there. And again, you as the seller are responsible for providing documentation for whether or not for when your customer tells you they are exempt from sales tax. That's something that you have to do as a seller. And again, one of the number one reasons why people will fail a sales tax audit is because they can't provide that documentation. And if you've never gotten a certificate, reach out. It's okay, don't panic, but reach out to your customer base now. Tell them you're updating your books for 2021 or Q4 and get that most recent exemption certificate on file, because that is one thing you're definitely going to have to do moving forward. And you always want to have that documentation. Now, what I hear from most folks is, well, we have 150 certificates. Okay, great. Can you tell me which ones are set to expire in the next 30, 60, or 90 days? States like Florida and Washington, the certificates expire every year. And our tool, Avalara Cert Capture, will actually charge sales tax the minute that a certificate expires. Now, granted, your customer is going to go, hey, you don't need to tax us, we're exempt. Then you're just going to let them know that you would need an updated certificate or their certificate has expired. And most folks are handling the sales tax certificates in a drawer on a server. And again, the majority of the folks we talk to couldn't tell me which ones are going to expire. But it's hard to find them. They're not trained to validate them. The retrieval is very time consuming. And again, if it's one of your largest customers and you don't have a certificate, that could be very, very problematic. Heaven forbid you go through a sales tax audit. So the certificates is very, very important. Need to make sure you have the documentation for those. And again, if you've never got them from your customers before, they've probably gone through a sales tax audit. They've probably also had other people ask for them. The thing I'll say before we dive into the Streamlined sales tax is a high percentage of the companies out there are now having to get registered in additional states. They're having to collect more exemption certificates. They're having to file more returns. They're having to get registered in additional states. So it's man hours are increasing, cost, if you will, for that compliance component is definitely going up, and you don't want to hire and put bodies on this. Sales tax is not a revenue generating activity. I'll be the first person to tell you that. But the good news is Avalara, and again, thank you for the folks for putting this on for the QuickBooks Connect show, is we're definitely here to help, right? And the thing that's going to be key is a lot of people ask, well, how much does it cost? Well, the good news is the Streamlined Sales Tax is a group of 24 member states that got together and was founded in 1999, and they wanted to put a simpler way to calculate, collect, file, and remit sales and use tax. And they put some tax definitions in. They have a governing board that approves the rates, as well as the item taxability, a exemption administration, and a uniform audit process. And Avalara is one of only a couple certified service providers, so a CSP, that is involved in the SST. And again, we've been partnered with them for over 10 years. So here's the best way I'll phrase it. Number one, in the green, the states in the green are the SST states. And if you're having to get registered in additional states solely due to economic nexus, meaning I never go to a state, meaning I never go to a state, but I now am passing a threshold, you want to keep this in mind. There's only 45 states plus DC that collect tax. So of the 46 states, 24 of them, so over half, are involved in the streamlined sales tax, and you can leverage Avalara for some benefits at no cost. And what that means is if you're solely having to get registered in a state due to economic nexus, you can raise your hand and be a volunteer remitter. And a volunteer remitter means the bullet points you'll see here below, but you don't have a fixed place of business. You have less than $50,000 worth of property, less than $50,000 worth of payroll, and less than 25% of total property in a member state. So as long as you've never gone to the state, you don't have inventory or employees, you can get registered in that state with Avalara for no cost. We'll save you $349 for a registration. So we get you registered at no cost. We will actually calculate tax in those states for you at no cost. And we actually file the sales tax returns for you at no cost in those states. So the SST is a no-brainer for companies that are having to solely get registered in states due to economic nexus. It's very beneficial. Avalara has a great partnership. We've been with them for over 10 years, and we ensure that the sales tax that the states need to collect actually gets to the states. The caveat is you need to use our tax calculation service, so we need to be integrated into your QBO or your QBD file. We'll calculate the tax. We will file the returns on your behalf. The typical go live for SST is about 60 days, more or less. It really just depends on you filling out the application and then waiting on the states to turn those around. We will actually assist you with onboarding for that purposes of the Streamlined Sales Tax program. It's definitely something to take advantage of as we close out 2020 and head into 2021, and can definitely save some costs. All right, so the next topic is going to be consumer use tax, and I hope everybody's still with me. We have a few minutes left. Consumer use tax is a tax that is owed by the buyer when they're not taxed the full amount on a purchase, or you're purchasing things that you're using internally for your company. And here's a couple examples. Out-of-state vendor didn't collect any tax. Purchase was originally put in inventory and was going to be resold, but was used. So think about if you're buying tangible goods and you're using them internally for your business. One of the examples I gave the other day was if I had a business in North Carolina and I had 7 employees and I bought 7 laptops from Virginia and shipped them to North Carolina, I would have to self-assess consumer use tax to the state of North Carolina for those purchases. And here's a couple examples. So free giveaways, internal service distribution, movement of fixed assets. Consumer use tax is also one of the #1 reasons why people will have issues in a sales tax audit, for what it's worth. And again, if you're in some of these common industries that you can see on the left, banking, insurance, distribution, hospitality, manufacturing, those are some of the most common industries that have use tax obligations. It's difficult to calculate, it's difficult to file and manage and determine, and Avalara has a consumer use tax module where we can actually automate all of this for you. So it's definitely worth a conversation. And here's some really cool statistics. So let me get these all up on the screen here. So 80%, I always go to the last one, 80% was the amount of audit assessment dollars due to consumer use tax. So just by not doing it all, that makes up 80% of an audit, right? 19 states charge consumer use tax on sales tax, charge consumer use tax on software as a service. 763 million estimated uncollected consumer use tax in California in 1 year, and that was just 2011. So these are some really important things as it relates to being compliant. Number one, getting compliant, staying compliant, and having that plan of attack so you can scale your business as you have to get registered in additional states. So another thing that's come up over the course of the past 9 months, as folks have either been thinking about different ways to go to market, working from home, removing some employees, or cutting back, is how to go to market and sell a different way. Well, here's the best way to phrase it. If you're shipping products internationally, odds are you're going to have to worry about duties, tariffs, import taxes. And cross-border is another one of our products in our suite where you can leverage, where we can do real-time calculations of the custom duties and or import taxes in your shopping cart or in your accounting software. And then we can also classify the items. So as a customer, or excuse me, as a seller, shipping, if you're selling direct to consumer, you're selling tangible goods, and that you're shipping it out of your country, you're going to have an HS code for all of those individual SKUs or individual products that you're selling. And HS codes are harmonized system codes, tariff codes used to identify numbers applied based on the product characteristics. Now you have to have this, you have to have it accurate, and it's also going to be key for the buyer experience. Because what you don't want to do is make a sale and then you ship it all the way over to their country, and then they get hit with $250 to actually accept it. So we'll talk about that here in a second. But there's custom duties, and then there's also an import tax. So we can get the HS codes for you, and we can also make the tax calculation for those custom duties. And again, we've seen a lot of companies that are broadening their product offering as well as how they go to market and are selling on multiple channels. Now, I hope we've done a good job as far as walking through kind of why you should automate. Number one, you have to make sure the calculations are accurate, because somebody goes on your website and they buy a product and then the sale is complete. You want to make sure you have real-time calculations that get it done right at the time of the sale. Number two, you have to make sure you're approaching this to be more efficient, right? You don't want to have multiple people, humans, managing sales tax, filing sales tax returns for you. You want to reduce cost, and you don't want to spend time on sales tax compliance. Trust me, I talk about sales tax every day, even 6 days a week, and there's a lot of components to it, but it takes a lot of time. And then risk management. So with accurate results, you'll decrease your company's risk. You want to be thinking about things that you outsource for your business, like whether you outsource payroll or something like that. We're the very similar concept, right? Calculating tax, remitting the sales tax returns, and again, a lot of folks on watching this today have probably leveraged a CPA or a bookkeeper to file their sales tax returns, and they would have done it in the past. But now you're having to get registered in a lot more states. You got to keep that in mind just to make sure you're reducing your risks. And again, customer satisfaction. So make sure they're getting the right tax calculated, make sure they're able to check out on the site, or they see the proper amount of sales tax on an invoice so they don't have anything in question. And then again, think about your business growth. So where is your company going over the course of the next couple of years? Because that's what we want to talk about for how I can automate it now as I'm scaling. And you have companies that are going to be on using QuickBooks Online or QuickBooks Desktop. The big thing for Avalara is you can never outgrow Avalara. So I mentioned earlier we have integrations into 700 plus, I think it's almost 800 plus now, different integrations. So you go from QBO to a NetSuite or Acumatica or Sage Intacct, any of those, we have pre-built integrations into those platforms already, and you just have to swap out where you're pointing our tax engine to, and it's business as usual moving forward. So you can never outgrow Avalara. And again, our services are a la carte. We can help you as much or as little as you need, but it really starts with a conversation. And how it's going to work from that perspective is you'll have an introductory conversation with a sales executive here at Avalara. They're going to spend about 30 minutes talking to you about what states you traditionally have nexus obligations in. They're then going to dive into which states you may have covered economic nexus, and then we're going to see if it makes sense to automate tax compliance. I talked with a gentleman last week. He sold pens, taxable pens in Massachusetts. That was his only state. Massachusetts has a flat rate of 6.25%. He didn't need to buy Avalara, but we had a conversation, at least walk through what it would be like if he did. And then again, here's a couple cool statistics. So our Avalara customers spend 58% less time on sales tax compliance. So the pre-built integrations, the real-time calculations, and then the filing and the remitting of the sales tax returns. I've never met anybody that likes filing sales tax returns. We have, I think, over 100 people in our compliance team alone here at Avalara, and that's all they do is file tax returns, and they're really good at it. So again, do what you do best, outsource all the rest. We're here to help you. It starts with a conversation, and appreciate your time today. And that's it for me. Thank you so much for watching. Take care.